In this chapter, we will continue our discussion of planning the audit by focusing on the role of internal controls, specifically the COSO framework. At the end of chapter 11, you should be able to do the following. You should be able to describe the three primary objectives of effective internal control, contrast management's responsibilities for maintaining internal control with the auditor's responsibilities for evaluating and reporting on internal control. Explain the 5 components of the COSO internal control framework. Explain how general controls and application controls reduce information technology risks. And lastly, be able to identify the types of information technology systems and their impact on internal controls. Let us begin with the 3 primary objectives of effective internal control. A system of internal control consists of policies and procedures designed to provide management with reasonable assurance that the company achieves its objectives and goals. Collectively, these policies and procedures make up the entity's internal controls. Management has 3 main objectives in designing an effective internal control system, which are reliability of reporting, efficiency and effectiveness of operations, and lastly, compliance with laws and regulations. The auditor's focus in both the audit of financial statements and the audit of internal controls is on controls over the reliability of financial reporting, plus those controls over operations and compliance with laws and regulations that could materially affect financial reporting. On the next slide, we will discuss management's responsibilities for maintaining internal control and the auditor's responsibilities for evaluating and reporting on the entity's internal control. Management, and not the auditor, is responsible for establishing and maintaining the entity's internal controls. Internal control systems are designed with 2 concepts in mind. Management designs a system that provides reasonable assurance considering the costs involved and inherent limitations where no system of internal controls can be completely effective. Effectiveness depends on the competency and dependability of the employees. However, collusion between 2 or more employees is still possible. Section 404 of the Sarbanes-Oxley Act requires management of all public companies to issue an internal control report that includes the following: a statement of responsibility from management for establishing and maintaining an adequate internal control structure and procedures for financial reporting, an assessment of the effectiveness of internal control over financial reporting at the end of the entity's fiscal year. Management must also identify the framework used to evaluate the effectiveness of internal controls. The internal control framework used often by U.S. companies is the Committee of Sponsoring Organizations of the Treadway Commission Internal Control Integrated Framework, which is also known as COSO. COSO was originally published in 1992 and then updated in 2013. Management's assessment of internal control over financial reporting consists of 2 key aspects. Management must evaluate the design of internal control, and management must also test the operating effectiveness of the controls. The Security Exchange Commission requires management to include its report on internal control in its annual Form 10-K report filed with the SEC. An example of management's report on internal control that complies with Section 404 of the Sarbanes-Oxley Act is shown in Figure 11-1, which is on the next slide. In here, we have an example of management's report on internal control that complies with the Section 404 of the Sarbanes-Oxley Act and related SEC rules. You can find Figure 11-1 on page 338 of your textbook. Auditing standards require the auditor to obtain an understanding of internal control relevant to the audit. The auditors are primarily concerned about controls over the reliability of financial reporting and controls over classes of transactions. Section 404B of the Sarbanes-Oxley Act requires that the auditor report on the effectiveness of internal control over financial reporting. Moving on, we will now discuss the 5 components of the COSO internal control framework. COSO's internal control integrated framework was developed in 1992 and then updated in 2013. The COSO framework describes 5 components of internal control: the control environment, information and communication, risk assessment, monitoring, and control activities. The updated COSO framework includes a total of 17 broad principles that provide guidance to support all 3 internal control objectives: reporting, operations, and compliance. In here, we have an illustration of how COSO represents the direct relationship between the 3 internal control objectives, which are operations, reporting, and compliance. The 5 components of internal control, which are control environment, risk assessment, control activities, information and communication, and monitoring activities. And lastly, the organizational structure in the form of a cube, which are the entity to the division to the operating unit and function within the organization. You can find Figure 11-2 on page 340 of your textbook. The first component of internal control that we will discuss will be the control environment. The control environment consists of the actions, policies, and procedures that reflect the overall attitudes of top management, directors, and owners of an entity about internal control and its importance to the entity. The control environment has 5 underlying principles: integrity and ethical values, board of director or audit committee participation, organizational structure, commitment to competence, and accountability. The control environment is an umbrella of the other 4 components of internal control, as it will be illustrated in Figure 11-3 on the next slide. As you can observe in this illustration, the control environment is an umbrella over the other 4 components of internal control. You can find Figure 11-3 on page 341 of your textbook. The second component of internal control that we will discuss is risk assessment. Risk assessment involves a process for identifying and analyzing risks that may prevent the organization from achieving its objectives. It involves management's identification and analysis of risks relevant to the preparation of financial statements in conformity with appropriate accounting standards. There are four underlying principles related to risk assessment, which are management having a clear objective, the determination of management on how risks should be managed, consideration of the potential for fraud, and management monitors changes. The third component of internal control is control activities. Control activities are the policies and procedures that help ensure that necessary actions are taken to address the risk to the achievement of the entity's objectives. There are three underlying principles related to control activities. Develop control activities that mitigate risk to an acceptable level. Develop general controls over technology. And establish appropriate policies, procedures, and expectations. Control activities generally fall into the following 5 types: adequate separation of duties, proper authorization of transactions and activities, adequate documents and records, physical control over assets and records, and independent checks on performance. There are 4 general guidelines for adequate separation of duties to prevent both fraud and errors. The separation of the custody of assets from accounting. The separation of the authorization of transactions from the custody of related assets. The separation of operational responsibility from record-keeping responsibility, and the separation of informational technology duties from the user departments. Proper authorization of transactions and activities is composed of both general authorization that management establishes through policies and procedures, and specific authorization that applies to individual transactions. Adequate documents and records involves the proper design of documents and records, which includes pre-numbering of documents consecutively, the preparation of documentation at the time a transaction takes place, designing records and documents for multiple use, and documents that are constructed to encourage correct preparation. To maintain internal control, assets and records must be protected. In addition, careful and continuous review of the first control activities must be performed. This is often called independent checks or internal verification. Personnel responsible for verification must be independent of those originally responsible for preparing the data. The fourth component of internal control is information and communication. The entity's information and communication system's purpose is to initiate, record, process, and report the entity's transactions and maintain accountability for related assets. The fifth component of internal control is monitoring. Monitoring involves ongoing or periodic assessment of the quality of internal control by management. In larger companies, the internal audit department is essential for this function. The COSO components of internal control and underlying principles are shown in Table 11-1, which will be on the next slide. In here, we have a summary of the COSO components of internal control and the underlying principles which we have just discussed. Do take note that certain control elements within the 5 COSO control components have a pervasive effect on the entity system of internal control and referred to as entity-level controls in auditing standards. Examples include the board and audit committee element of the control environment, the entity's risk assessment process, and the internal audit's role in monitoring controls. You can find Table 11-1 on page 348 of your textbook. Moving on, we will now discuss the general controls and application controls to reduce information technology risk. Technology can strengthen a company's system of internal control, but it also provides challenges. The IT controls address the risks related to technology. There are 2 categories, the general controls and the application controls. The general controls are controls that apply to all aspects of the information technology function, while application controls are controls that operate at the process level and apply to processing transactions. Figure 11-4 shows the relationship between general and application controls. The categories of general and application controls will be shown in Table 11-2. We will discuss both in the next 2 slides. In here, we have an illustration of the relationship between general and application controls. The oval represents the general controls that provide assurance that all application controls are effective. Effective general controls reduce the types of risks identified in the boxes outside the general controls. You can find Figure 11-4 on page 349 of your textbook. In here, we have a description of the 6 categories of general controls and 3 categories of application controls with specific examples for each category. We will discuss these categories in more detail in the next slides. You can find Table 11-2 on page 350 of your textbook. The 6 categories of general controls have an entity-wide effect on all information technology functions. The 6 categories of IT general controls are the administration of the IT function, which involves the oversight by the board of directors or senior management as necessary function for effective IT controls. The separation of IT duties control is data control that should be separated into the following categories: information technology management, systems development, and operations, as well as data control. In here, we have an illustration of the separation of information technology duties. The extent of separation of duties depends on the organization's size and complexity. Do take note that in many small companies, it is not practical to separate the duties to the extent that we see in this illustration. You can find Figure 11-5 on page 351 of your textbook. Systems development is a general control that includes purchasing or developing software that meets the organization's needs, as well as testing all new software to ensure that it is compatible with existing software, which may be done as a pilot testing or parallel testing. Physical and online security is often called cybersecurity. Physical controls is a general control over computer equipment, including hardware, software, and backup data files. Online access controls are general controls that includes proper user IDs and passwords. Backup and contingency planning controls is one where information technology must have backup and contingency plans because information technology systems are subject to power failures, fire, excessive heat or humidity, and even sabotage. Hardware controls are general controls built into computer equipment by the manufacturer to detect and report equipment failure. Application controls are controls that are designed for each software application. Controls may be manual or automated and include the following: input controls, processing controls, and output controls. In here, we have examples of batch input controls, such as the comparison of a record count calculated before data entry of the number of vendor invoices to be entered and the number of vendor invoices processed by the system would help determine if any invoices were omitted or entered more than once during data entry. You can find Table 11-3 on page 354 of your textbook. In here, we have examples of processing controls which are often programmed into software to prevent, detect, and correct processing errors. Examples of processing controls include the determination of the accuracy, validity, and completeness of the data. You can find Table 11-4 on page 354 of your textbook. We will now discuss the types of information technology systems and their impact on internal controls. The types of internal controls will vary based on the type and complexity of the information technology system. We will briefly discuss a few of this system. First is the local area networks, which connect equipment within a small cluster of buildings. Wide area networks are used to connect equipment in larger and even worldwide geographic areas. The database management system enables companies to share information across several platforms. Enterprise resource planning systems integrate many areas of the company into one accounting information system. Companies also use firewalls, encryption techniques, and digital signatures to increase security over information technology systems. In addition, information technology services are often outsourced to service centers, including application service providers and cloud computing environments. This is the end of the discussions for Chapter 11. In this chapter, we covered internal controls, including internal controls related to computer-based information systems and the COSO framework. Please complete the required evaluation method for Chapter 11 as it will be part of your final grade. Use Blackboard and Pearson's My Accounting Lab to complete the requirements. You have reached the end of the course presentation for Chapter 11. Please access the video for Chapter 12 for the next presentation of the course.